Hello everyone, Mike Anning here with the Mosaic Mortgage Group. I'm sending you this quick video. It's a market update over the last couple days, but it's important to send it out now because we have seen over the last several months, weeks, and specifically last week, an increase of interest rates across the board. And I wanted to give you a little explanation of what's really going on. So in terms of mortgage interest rates, which is the most important thing that we do, this video is going out to clients that we have that are currently pre-approved and shopping, as well as some of the leads or other people that we've been working with that are interested in buying later this year. So what we've been seeing specifically in the mortgage market is an increase of rates. So what you'll see behind me here, this is a chart of the one thing that does affect mortgage interest rates. It's your Fannie Mae bond. And as a bond, it has been declining in value. So when you look at this chart, it's important to know that it's inverted or upside down compared to interest rates. So as we see the decrease here, which I'll talk about in a minute, that actually shows that the interest rates for loans is going higher because of the dollar cost, and I'll explain that in a second. But what we'll see, this is a 90-day chart. We've actually seen the values kind of tread water, and we've seen a lot of noise, and then we've seen just in the last 60 days, 45 days, a relatively big slide. And specifically, we saw last Monday a fairly large increase in interest rates. Between Monday and Friday, interest rates rose about 0.25%, which is a pretty big amount of rate increase within a short amount of time. So here's what's happening. So as you pull out your dollar, you've got 5s, 10s, 20s. You've got these dollars have a choice to make. Do they want to stay in bonds where they are relatively safe but don't make a lot of money? Or do they want to go somewhere else and grow? So this chart here is what's happened over that same timeline the last 30 days in the stock market. This is the Dow Jones. So these dollars, because they want to grow, have been coming out of the bond market, out of safety and security, because they want to grow and are moving into the volatile stock market where they can grow at an accelerated rate. So that's exactly what we're seeing now. These dollars have been coming out of our bond market and going into the stock market. So with that, if we go back to the bond market, if we see the values decrease here, again, over the last 90 days, specifically in this area here, what happened? So 2 weeks ago, the Federal Reserve raised the prime rate. So your credit cards, some student loans, short-term loans got more expensive. Your home equity line, if you happen to have one, those types of loans got more expensive. And also unemployment came back. Good reports there. Not only are we seeing record lows on unemployment, we're also seeing wage increases finally. So while unemployment has been low for some time, we're finally starting to see wages actually being reported higher, so people are actually making more money. Now, we're in the Silicon Valley, so we've got our own microcosm of economic activity that's unique to our area. But for your home loan rates, and what we're working with, what we try to help out with, is we did see a sharp increase. We have seen it over time. But, if we're looking at writing offers at any time soon, we want to make sure you're up to date. So in any event, the reason this is just to make sure that you're aware. Interest rates started the week off last week, a little over 4.5%, 4.625, closed out the week closer to 5 or almost over that if we weren't perfect in our parameters. So I just want to make sure you're in tune with us as you're looking around. Send us a note, reach out to me and my team. We'll make sure that you're up to date with your current situation, because affordability being the number one thing, raising interest rates does make your payments higher and does eat into the affordability factor a little bit. So we want to make sure there's no surprises and you're well informed. So if you'd like to set up an individual call, I'm happy to give you a perspective on how this is translating into our local real estate market. And if you'd like to see updated payments just with your unique situation and profile or loan, let us know. We can get that over to you as well. But in any case, want to make sure you knew what was going on. If you have any questions, give us a call here. Mike Anning, Mosaic Mortgage Group. We'll talk to you later. Thank you.